Hi guys, today is Friday, June 5th, and I just want to come on here and explain why the market is experiencing a pretty large sell-off here today, especially in the tech industry. I think probably the main reason for this here is that the U.S. Bureau of Labor Statistics came out with a report for the month of May and said that the economy had added about 172,000 jobs, which is much higher than what Wall Street had originally expected, which might sound like a good thing to most people, but unfortunately, this signals that the economy is still running pretty hot, and it basically eliminates any chance that we had for a Federal Reserve interest rate cut coming up here, and most likely signifies that we're going to see a Federal Reserve interest rate hike, which cannot be good, especially with the signs of stagflation and inflation that we've seen recently here. Also, to pair with this, the U.S. Treasury yield is up to a 15-month high at about 4.18%. When you see bond yields raise like this and heighten like this, more people are likely to sell off in the stock market and put their money in what is considered to be a safer investment like a bond. So that's also why you're seeing a sell-off here today. Also, to pair with all of that, chip makers are taking a hit, like Broadcom and Ms. Resnick knew earlier this week, and you're seeing massive drops among other chip makers, like Philadelphia Semiconductor Index dropping, and that's why you're seeing the Nasdaq down around 3% today. And you're seeing the S&P down because all these big chip makers and big technology players are down, and it's causing everything else to come down as a result of the domino effect. Along with this, you're seeing a little bit of anxiety in the market, especially with people viewing some of these AI stocks as a little bit overvalued. As like we have an IPO, a couple big IPOs coming up here with SpaceX set to IPO in about a week from now, and OpenAI and Anthropic expected to IPO here in the latter half of 2026. We have SpaceX IPO valued at about $1.5 trillion, which is huge for a company with zero profit and profitability not really being in reach for that company. It's looking a little risky, and people are starting to wake up to this a little bit. And that these overvalued companies is pretty consistent with that of what we saw in the dot-com bubble of the early 2000s, as well as with these Fed rate increases. It can cause some turmoil in the market here. So it's definitely something to be on the lookout for, and make sure you're safe when investing in these big AI companies and tech companies here in the near future. As always, this isn't financial advice, and be safe.